morning and welcome to Indian Open right here on BloombergQuint. I'm Neeraj Shah, with me is Devina Khanna, and it promises to be a good day of trade. Good morning, Devina. You have to say for once, if you are bullish, and frankly, irrespective of how you are about the markets, the fact that there's talk of economies opening worldwide, New Zealand seems to have contained the virus, Gilead drug seems to be showing signs of some effectiveness. There is good news all around, and we're looking at some ammo from our side as well, with the RBI presser today and possibly some package from the Prime Minister's office or from the government over the weekend. So lots of good news to watch out for.
Good morning, Neeraj. Yes, and that's exactly the reason why you saw a lot of those NBFCs rallying in trade yesterday. Maybe a precursor to something that the governor could announce in terms of making sure that there is a credit line available to those NBFCs. We'll talk about all of that and more in a bit. But like you said, the rest of the world seems to be an okay place. While the close in yesterday's session for the S&P 500, Nasdaq, and Dow were muted, but in the positive territory, the indication coming from the futures is more stronger this morning. You've got the S&P futures up almost 3.2%, and so is the case with the Dow futures, which is up about 3.5%. Remember, macro data is still negative coming out across the globe. So you have the jobless numbers spiking significantly. Again, this week, you've seen a surge in the jobless numbers. And now, if you take a look at this Bloomberg chart, you can see that all the jobs that were created, the white line is the jobs line, and the blue line is the jobless claims line. So all the jobs that were created from 2008 have been wiped out. So now you're back to square one with jobs losses in the US. Coming to Asia, then, you have, again, a spate of negative macroeconomic data, while the rest of Asia is still doing okay for itself. And in fact, China is doing okay for itself. But the economic data there and the first quarter GDP print was disappointing. Came in at a contraction of 6.8% versus a market expectation of about 6%. However, if you take a look at all of the MSCI-related stock indices, if you take a look at the Asia Pacific, emerging markets, all of them actually from the 23rd of March have actually shown a momentum on the upside, and you've seen gains and recoveries coming in, almost to the tune of 20%, indicating whether or not this sustains is another question, but at least the onset of some positivity.
Yes, it does. The going seems to be good for now. Let's wait and watch if this lasts. We'll get to the market conversation as well. First, let's just tackle one key domestic issue and then move on to the markets full throttle. IT. Agam Vakil first joins in to tell us, what did TCS have to say when it comes to the outlook ahead? Agam, let's just begin with the quick highlights of quarter four and then the comments that TCS gave.
So when it comes to the fourth quarter, it was largely on expected lines, if not a little bit of a miss, but well, it's within the the 2.5% range when it comes to the expectations. We saw dollar revenues decline by around 2.5%. We also saw margins come in largely flattish at around 21.5% against 25%. And well, of course, when it comes to net profit, that also declined marginally sequentially by less than 1% at around 8,049 crores. What really stands out is when it comes to BFSI, retail, there has been some amount of weakness. Surprisingly, manufacturing, at least in rupee terms, has actually seen sequential growth. But at the end of the day, it comes down to what the company has to say about the outlook. The company did make record bookings in the quarter, and the total contract value at the end of quarter four stood at around $8.9 billion. But that said, in the last 2 weeks of March was where they did see significant amount of disruption, where they had to very quickly adapt to the new working style. And that has led to some amount of weakness. And there is also some amount of weakness when it comes to demand from customers. However, more importantly, management has said that the impact of the coronavirus outbreak is still to play out. It will play out in the ongoing quarter and the quarter following it. And they only see normalcy returning to the December ending quarter. So we're still a while away from there. So there still are some amount of concerns when it comes to TCS and the outlook going forward.
Right, Agam. Thank you so much for that. So that's TCS. It's one of the biggest, still managing to post a decent quarter, but again, they're not far from the peak pain, and that's what the management indicated as well. If you look at global financial crisis, that too came in a bit later, and you're going to see the next 2 quarters being painful. But Madhu Babu, analyst at Centrum Broking, is joining us right now on the show with a quick take on the TCS numbers. What did you make out of the numbers and the commentary, particularly, Madhu, and the pain that the management talks about? Probably recovery starts from the December quarter.
Yeah, so they were comparing it to the global financial crisis and asked us to model the business according to that. So in the peak of global financial crisis, I think the one quarter company has declared on a 5 to 6% constant currency decline. So that is the similar way I'm looking at 1Q. 1Q I'm looking at a 4-5% decline in revenues QOQ sequentially. And even maybe 2Q will be kind of a flattish, and opposed that 3Q, 4Q I'm building some recovery. But management appears to be building some optimism in second half in a steeper way the way they have given the guidance. But overall for FY21, I think the company will decline by around 4%. Revenues will decline by around 4%. The currency depreciation should help on the margin. So margin decline might not be that steep in this year. So stock is currently almost at 19 times FY22 earnings. So it's relatively the costliest stock in the sector. So I expect some kind of range-bound movement in the stock as of now. So nothing much in that sense. So the hiring for this quarter has been steady, but they cited that they will take all the campus offers they have given earlier. So overall, that is the outlook. Yeah.
All right. So, I mean, their commentary was a little bit more, doused down as compared to Wipro's grim forecast. Do you feel that, now even within the IT space, now we're a services, exporting heavy country. Once this starts to peak out and we start a recovery coming back, then these are the counters, TCS, Infosys, that have been bellwethers, will continue to do well. In light of that, would you take a view on any of the stocks? What would your pecking order be within the IT part?
See, we have been relatively recommending Infosys and HCL Tech because they are more cheaper on the valuation. In fee at around 15 times FY22. HCL is around 10.5 times currently, whereas TCS is around 19 times. So relatively, we have been recommending those two. So that would be. So the question is that whether you will have a steep second half recovery, because a lot of verticals have been impacted by this crisis. And the impact on economy has been much higher compared to the global financial crisis. So whether there will be some pricing erosion and all, it looks more likely because even ISG call was citing that there could be some pricing erosion from large clients. So the way TCS is expecting a strong second half immediate surge in 3Q, 4Q, so that looks a bit difficult in my view. So because there could be some reset in the way dynamics of the pricing and all works in the post this current crisis. Especially some verticals have been completely hit for the next 1.5 to 2 years, especially some of these like airlines or hotels, automotive and all that. So there I expect some, even good spend cuts as well, even some of the retail accounts.
Okay. We leave it at that, Madhu Babu. Thank you so much for joining us this morning. So still looking at a few stocks which are cheaper on valuation. So Infosys and HCL Tech. Let's bring in Siddharth Khemka into the discussion. Siddharth, good morning to you. We've seen two numbers coming about. We are going to see more numbers starting to trickle in for quarter 4, but not much is being expected. Today's bigger expectation is the NBFCs and what the RBI governor can announce for NBFCs. A whole wish list has come out, a line of credit, a moratorium for them, a pushback of payments from 90 days to 180 days, relief measures of sorts. So do you feel that this could be something that could have already been priced in after yesterday's big moves in some of those housing finance companies and other NBFCs as well?
Yeah, good morning, Ravina, and good morning to all the viewers. So we already had RBI giving out a lot of these incentives and guidelines for the banks. The NBFCs which were missing out and were demanding for more clarity as to what will be applicable for them or not. Maybe RBI will talk about them, but we should not expect anything more than what the benefits that the RBI is giving to the banks. So in that sense, right now it doesn't look like they will give NBFCs a more than a 3-month kind of a grace period that they have provided to banks. And to some extent, yes, these stocks started moving yesterday. We will have to wait because the governor would be speaking at 10. So the start of the session itself will get clarity on what kind of measures he's talking about. And to add to it, we are also expecting the finance ministry to come out and give out the industry-wide specific the fiscal side, the stimulus for the economy, which could also be positive for the entire SMEs, which is where the bulk of pain for the financials are right now. So these two combined should help to some extent alleviate at least right now, the sentiments that became so worse for the financials, that we have seen this kind of sell-off, which should cool off at least to start with.
Morning, Neeraj here. So what has been the chatter in your meetings in the last 24 odd hours, this morning and maybe yesterday? Are you telling clients to initiate select long positions, trading or investing into some of the beaten down sectors and specific names? If so, what? I mean, because yesterday NBFCs moved up, Piramal did not. We had some real estate stocks doing well, but DLF did not. So where is it that you're telling people to take positions?
Yeah, Neeraj, so maybe from a trading perspective, we have been suggesting some of the beaten down names. From an investment perspective, some of the sectors that we have been focusing for a while, obviously the consumer and pharma, which has moved up now. So we are suggesting to wait for some correction which might happen in the market, and then to initially to accumulate on a gradual basis. Some of the beaten down stocks or sectors are, for example, that we are still suggesting from an investment perspective is select banks, for example, HDFC Bank and ICICI is something that we are still recommending. Reliance Industries is something where we believe that the valuations have come down to an attractive level despite the pressures on the core business and the retail business. We believe the valuation is attractive from an investment perspective, and definitely one should look at that stock as well. Technologies are another where we are suggesting selectively to look from a long-term perspective, given that near-term pain and challenges remain. We already saw the Wipro numbers and the guidance being removed, plus the near-term pain that they may face in terms of the slower spend, the cost-cutting measures that some of these large companies may take. So still we are saying that looking from an investment perspective, the sector looks more resilient. The rupee is also supported. The depreciation in rupee is also supported to some extent. So we are looking at stocks like Infosys, HCL Tech in that space.
Okay. Well, watch out for some of those as well. Now, viewers, keep in mind the pocket that looks really interesting. Of course, the usual suspects are the NBFCs, and you have to watch out for those names. The pocket that looks really also very interesting is some of the housing linked names, because I would guess that any kind of measure would need to take care of construction and housing. And therefore, those are names that would be safe to preempt. You definitely can't preempt what will come in the package, but you can take your positions based on a hypothesis that you're building. And Siddharth, want to come in on that? Would you look at say a Piramal Enterprises, an HDFC, some of the housing linked NBFCs, or maybe even the pure play real estate names, which largely have been beaten down? And if so, which of these housing linked NBFCs, which of the real estate companies?
So Neeraj, it's very difficult, as you said, to preempt. Let's wait for the real stimulus to come out. But having said that, if at all I would prefer something, I would prefer in the NBFC space as something like an HDFC Limited, which is the market leader, one of the best capitalized companies in the space. And even though it may not move as high as something like a Piramal or some other companies, but the downside is also protected to that extent, given the quality book that they have. So the pain and pressure is there. We have been seeing the slowdown in the housing space, plus that even before the COVID impact was there, and now with this pandemic, I think the demand in the near term will be under pressure. The second is whether you want to play the real estate directly through some of these companies. Very difficult to give a view right now. If at all I would want to play the building materials or housing, I would rather go and look at some of the cement players, something like an Ultratech, which would give me an exposure not only to the housing but also to any spend on the construction infra side that may happen few months down the line.
Okay. So maybe discretion is the better part of valor. So maybe wait for the announcements to come in and then try and figure out what to do. But mind you, viewers, the trend seems to be bullish right now, and if at all, from a day's trade perspective, your bets might likely be on the upside as opposed to the downside. We'll ask our technical experts about that, but just before we go to them, I want to mark a quick set of the stocks which are in news and which you should focus on as well, aside of the big RBI press conference piece of news. So aviation stocks, the Ministry of Civil Aviation has asked the airlines to refund the full amount for both international and domestic travel, but hold your breath. The refund will only be made if the tickets are booked during the lockdown period, which is March 25 to May 3rd, for the same period travel, so not for tickets booked earlier. So virtually useless. I don't know how many people would have actually made some large bookings between March 25 to May 3rd, but watch out for the aviation companies. Tata Motors, the long-term issuer default rating downgraded by Fitch Ratings to a B from BB minus. Let's see if there is a bit of a negative reaction, if at all, on a day when the markets are looking to start so positive. I would doubt. Oberoi Realty is an interesting one because they've repaid NCDs worth 125 crores ahead of time. A risk on mood today, maybe Oberoi Realty could be a stock in focus. And companies like JK Lakshmi Cement, Sudarshan Chemicals, as well as Graphite India have started partial operations or have received permissions to start operations at some manufacturing facilities. And therefore, these could be interesting names to monitor in the session today as well. But well, our technical experts join in, and let me start off with Shrikant Chauhan. Shrikant, we'll start off gap up. That's the issue. Yes, the sentiment is positive, but because we'll start off gap up, what's the trade that you suggest post that? Let's assume we start off 200 points higher on the Nifty. What do you do post that?
Yeah, that's the issue, because if we are going to see opening by almost 200, 250 points as compared to its previous close, then I think around those levels the market should start consolidating. Because again, there is one more announcement which is going to come from the RBI around 10 o'clock. So maybe the market will spend time between this 9:15 to 10:30, 10:15 till the announcement comes. And later on, again, it will start reacting based on its the overall outcome. But technically, purely based on technicals, if we see the market is opening around 9350 or 9400 levels, then there we have to be careful. In fact, there we should look for reducing some long position or weak long position if there are any, because 9400 is the 40% retracement of the entire fall that Nifty witnessed from the highs of 12,400 to 7,500. So there we feel the market is going to come under some pressure. But in case if we see the market corrects to 9140, 9150 levels immediately after opening, then there we can certainly look for adding long positions with a view that around 10 o'clock, again, we may see the levels of 9300 or 9250.
That's on the index, but you will see that gap up opening based on what the SGX is doing this morning. Shrikant, what about individual stocks?
Yesterday there was activity in all real estate companies, and the activity was along with very good volumes and a few reversal patterns on daily as well as on weekly charts. Godrej Properties, which was around 690.95 yesterday, is in proper specific reversal formation. There we feel that the stock is heading for at least 740, 745. So we should look for adding long positions on Godrej Properties. We can keep stop loss at 680 for the same. The other stock which we like is Titan, which was around some 995, 996 yesterday. And there also we feel that it is heading for the levels of maybe 1,050, 1,060. The stock has formed bear trap formation, and since then the stock is heading higher. In fact, last Friday, when the stock was was going to open down because of some guidance and all, that time it was going to open below its key support area, but it opened and it quickly recovered back. So it shows that there is like good amount of beta people stuck in that particular stock, and maybe because of this we are going to see some more short covering in the near term.
Okay, yesterday's big moves came into some of the auto ancillary names as well, and we've been hearing comments about how post coronavirus the auto industry will once again start to ramp up. We've got Motherson Sumi that rallied. We had Bharat Forge that rallied. So all of these stocks, got some interest. Motherson Sumi has its own pluses of positive news. But what would you do with the Motherson Sumi if you held it right now, Shrikant?
I think from the auto ancillary space, certainly we should look for adding the stocks from the tire space, with tire segment like MRF as well as Balkrishna Industries. There we feel that we should look for adding long positions because they have fallen to their extreme support areas. And if we compare them with their past sell-off, then they are forming some higher bottom formation. So we are specifically bullish on all tire companies, and there we can expect some furthermore activity. Motherson Sumi has delivered excellent return in last 4-5 days. It is up by almost 40-45% as compared to the lowest low which the stock has made. But the reason is also there for the fundamental reason is also there for the stock to move higher. So there also we feel that 100 plus levels is not ruled out, but currently it is far away from its recent low. So it is better to focus more and more on Balkrishna Industries and MRF.
Okay. Watch out for all of this names. Shubham Agarwal also joins in right now. Shubham, great to have you. Good morning. Let's talk about the index. What are the bases that you're putting in place, the support levels? And assuming today's open is going to be 9,200 plus, closer to those levels, should you advise long positions?
Hi, good morning, Devina. So if you look at the index view first, if you pull out the last two interactions that we had, the first one on 27th March when the market was at 9,000 and we clearly said that we might head towards 8,200 level. And then again on 3rd April where the market was roughly around 8,100 and our target was 9,200. So I remember one of your terminology that you floated on this show was that about Yes Bank that was a ping pong game, but I believe that market is now in a kind of a ping pong game where every time you see that a new high is getting attempted, that is getting sold off, and obviously on the other side we have supports as well. So I think the overall view is consolidation, and in this consolidation we shouldn't be looking for a buying opportunity when the market breaks out. So even though the market for the day remains positive, but I think once we reach the level of 9350, 9400, we should also think about booking profit. So overall, for the day, the view is positive. But if you look at a slightly positional view, then I would be of a view of booking profit around 9350 to 9400.
Okay, so and that's probably what most of the people who entered at around 8,850, 8,900 are going to do today. So you might actually see that pressure coming in as well. What would you do for stocks, Shubham?
So Devina, two stocks, and both are purely from an intraday perspective, because I believe after today's run, we might see some exhaustion coming on the index. So from an intraday perspective, SDFC Limited is the first name which can see some decent rally today. And if you look at the stock has been consolidating for a quite long time. Yesterday we had some built up happening there. So some follow-up buying is expected in SDFC Limited. So this can be participated with a 1700 strike call option. The target for that will be 80 rupees, and we can maintain a stop loss at 40. And the second call is a buy call again on SBI. So this is a short heavy counter, and after the move that happened yesterday, there are indications that we might have a temporary one-day kind of a short covering rally coming in there. So purely from a short covering perspective, a 200 strike call option can be bought. We're looking for a target of 12 rupees with a stop loss at 5.5.
Guys, I'm intrigued about the movement that we saw in one of the stocks yesterday, and that's Piramal Enterprises. Shubham, I want to come to you on that. How do you approach Piramal? Yesterday, the entire pack was higher and Piramal wasn't. If it moves slightly higher today, based on the risk-on move that we may have, can somebody initiate a fresh trade here?
Yes, absolutely, Neeraj. In fact, Piramal is on the first place in my watch list for a shorting candidate. And after the rally that happens today and after the gap up opening, if we get some lucrative level of 925, 930, I think that will be a very good level to enter in a short trade, because If you look at the medium-term structure is clearly bearish. The recent rally happened because of short covering, which is not a directional move. It's just a pullback. And after the consolidation, we can see that 980 is acting as a very stiff resistance for the stock. So around 920, 925, I'll be comfortable to go and build a short position. We can maintain a stop loss around 960. And from a positional standpoint, I would expect a target of closer to 780.
Okay. Siddharth Khemka just wondering, and again, I'm not trying to say that Shubham's call is wrong out here. I'm just trying to ascertain from you. Fundamentally, if there is some bit of a package that comes in for the beleaguered real estate or the real estate exposed NBFCs, could even a slightly weaker name like Piramal Enterprises continue to ride higher fundamentally?
Yeah, Neil, so definitely if you see any relief given to stressed companies which are factoring in the worst, so that the stock prices have already fallen in, factoring in that things are going to become worse. And as we heard from Shubham as well on the derivative side, there are a lot of short positions that have been created. We generally see some kind of pullback. The sentiment does change. There are a lot of people in the market who are willing to take those kind of risks, assuming that the valuations are not factoring in the positives that are just announced. So yes, it can move, but fundamentally the balance sheet and the business is weak. Even if when one were to look at, we can look at some of the better housing finance companies or companies which have partial, so something like a Chola, which has some exposure towards the housing and the mortgage book, plus some of the other books, which have a much better and a cleaner balance sheet, so to say, from an investment perspective. But as you said, yes, from a trading perspective, you will see sharper moves coming in out from some of these weaker names like Piramal, which are more exposed or have a higher exposure towards the housing sector.
Well, maybe it's tough for experts, and therefore viewers, if you're not quite sure, don't quite trade Piramal or some of the others. Both could happen, right? They might have an exaggerated up move, but as Shubham said, maybe the charts and the setup is this, that at a higher level, people will come in and short, and you might actually have a resumption downwards. So please be very careful if you're trading these. Devina, the other thing is, maybe from an investment perspective, Devina, try and look at businesses which are actually benefiting or just having a 1 month of a problem. Like yesterday, GMM Pfaudler said that they are not even revising the guidance downwards. Some of the specialty chemical companies, once the shipments start and they look like they're starting as per what a couple of other companies said, even their businesses B2B might be on track.
Yeah, and we've got even some of the cement majors saying that once production starts and once construction activity begins, but again, that is demand led. So, but there are far and few, Neeraj, that you can pinpoint in this environment that have just this 1 month lockdown production period. Even Parag Milk Food, smaller names. So probably look at some of these FMCG names which had product in the pipeline, inventory built up that they used during the lockdown phase, and now once the production is allowed, they've started to go back on stream. They're going to refill those supplies to stockists as well. So
yeah,
mainly FMCG.
Yeah, but mainly hoping that those supply chains are able to cater to the products being sold as well. So that is part one. But yesterday we spoke to viewers. I would urge you to go and hear that interaction with GMM Pfaudler on our website. I mean, they said that they're not even revising the guidance downwards. So Devina is right. There are just very few companies like that. But hey, those are the ones that maybe you need to hunt for. So keep that at the back of your mind. Siddharth Khemka, quick 30-second view. What is your top investment idea currently?
Top investment idea right now is within the FMCG space, and that is HUL.
All right, HUL there. So again, looking at FMCG, but remember, FMCG tends to be tricky in an uptrend, because while you do see a lot of money looking to have a safer investment that goes into FMCG in these tumultuous times. But once again, but the moment you see beta coming back or risk on trade coming back in, FMCG stocks just do take a little bit of a backseat. But a minute left to go for market pre-open. SGX Nifty is still going strong. You're still seeing an uptick of almost 3% on the SGX Nifty, and US equity futures as well are still holding on to gains. So you can anticipate a bigger open. Currency, watch out for that one. 76.87 is where it shot up in yesterday's session. So a record low again for the currency. Pre-open coming up on your screens, muted. Okay, an open of about 3% for the Nifty 50. That's almost 9,300 that we're looking at right now for the Nifty. Remember, we missed out the last 2 days gains that the SGX Nifty had posted as well, with the close dip for yesterday on the downside. So 92.83 on the Nifty right now. Sipla is up about 10%. IndianOpen Bank is up about 10%. IndianOpen Bank, remember, you have been seeing a value emerge at these lower levels where investors are picking up and big bulk deals happening. Goldman Sachs picking up a 0.65% stake day before yesterday in IndianOpen Bank. Axis Bank, yesterday Saurabh Mukherjee spoke about Axis Bank saying, don't just look at the frontliners, look at some of the companies in the second line that could have lost a lot of playground, and now they're starting to come back in focus. So Axis Bank being one of them. But remember, all these banks, all NBFCs ahead of the RBI governor's announcement are going to remain in focus. Bajaj Finance 5.5% higher. Kotak Mahindra Bank, HDFC, Reliance Industries 4%. Ultratech Cement, UPL, Tata Steel are up in the session. Sun Pharma 2 doing okay. A lot of gains. Only TCS, the one that got reported with numbers yesterday. Commentary was a little bleak, saying that recovery will come in the December quarter, but they maintained themselves in quarter 4. Peak pain is not yet factored in, not yet built in, and you will see that coming about. So 3% lower for TCS, sorry. And the currency yet not showing any change for me as of now. So maybe it'll just take a few more minutes to refresh. But Neeraj, what are you spotting?
I will watch out for some of these NBFCs, Devina, in the session today. Aside of TCS, which is a newsmaker, not too many other newsmakers. So just watch out at the broader end of the spectrum for what a Piramal does, what a Chola does, what a M&M Financial does. Those are the names that, frankly, you got to monitor from a trading perspective early on in the morning. That's essentially the long and short of it. We might have a couple of stocks losing as well, but Shriram Transport, Indiabulls Housing, Piramal, that's the pocket that you got to focus on in the session today. Shrikant Chauhan, wondering, the other big move over the last few days is Motherson Sumi, up 10% in the session today as well, at least the pre-open rates, with the presumption that it starts off higher. Would you take some money off the table if you were long, or would you continue long?
Certainly, we should look for taking some profit, because yesterday when the stock was almost up by 16%, it was totally up by some 40% from its lowest low. So we are of the view that if we see the stock is opening somewhere close to 93, 94 levels, then there we have to be very, very careful. Because whenever the stock has moved to the levels of 95, 96, it came under some profit-taking pressure. But we like tire companies. We like Balkrishna Industries, which is trading somewhere around 903, 904 levels. And there we feel that the stock is having potential to move towards at least 1,000 plus or 1,050 in next few days. So the formation is clearly bullish, and we should look for adding Balkrishna Industries to our trading portfolio. We also like Vedanta, and there the formation is of rounding bottom. So it's a classic formation, and such type of formation always results into a very strong returns to positional traders, very good returns to positional traders. So we should look for adding Vedanta also, and we should keep a close watch on Vedanta, whether there is any specific development is happening or not.
Okay. Just want to focus on a few more names, that have resumed some operation. So one being JK Lakshmi Cement, its grinding unit at Kalol and Surat have begun operations. And you've got a Grindwell Norton, you've got a Sudarshan Chemical. They've received permission to start operations in manufacturing facility. And yesterday you had a whole host of other names as well. Graphite India 2 has started partial manufacturing operations as a graphite electrode plant in Nashik. A quick comment on, HEG Graphite. That do you track these companies? And even if you were to, put in some of these metal names now, we're looking at China steel prices increasing, though there is still inventory in the pipeline, but they're expecting once activity picks up whole hog, these prices could go up further. So what do you anticipate for metals and then graphite, HEG?
That question is for me?
Yes, Siddharth.
Yeah. So we don't track HEG or graphite as of now, but The broader question on the metals, that definitely looks like, as you were saying sometime back about the risk on trade, if things were to improve on a gradual basis, if the gradual opening up of the industries, one sector which would definitely benefit is the metal sector, and that's a good risk on trade that one can look at. Unlike some of these NBFCs where any bounce could be sold off sharply, this is a sector where one can definitely do both from a long-term investment perspective as well as short-term trading opportunities are also good to play in the metal sector. We would believe that while commodities over the next 1.5 years would underperform the market given the expectation of a global recessionary kind of a period, some of the developed economies where there are talks of the recession which could be as worse as the Great Depressions of the 1930s. So we would definitely see some kind of pressure in the demand as well as prices. But initially, as things open up, the sector has witnessed a sharp correction, and to that extent, some of the valuations for stocks like you have players like Hindalco, JSW Steel, Vedanta. These are some preferred players within the metal space that one should definitely look at.
Okay. Watch out for some of these microfinance lenders as well, like Spandana Spurti, Credit Access Grameen. Any announcement in favor of providing an additional credit line to NBFCs or moratorium for them could actually be much more positive for even these microfinance lenders. So they're up in today's session ahead of the announcement. Bajaj Finance, like we said, around 5% higher for the stock. And IRCTC again locked up an upper circuit in today's session. Shubham, while obviously it's difficult to talk about IRCTC because the gauge, the data points itself are less, but also the fact that it's gone up so sharply and come down and come back, gone up, come down, come back up now. But looking at where it was, is now an entry point attractive enough, 1350?
Yes, I think from a purely trading standpoint, if we look at the setup, there was a 3-day consolidation which can be termed as a kind of a continuation pattern from where the breakout might happen today. And I think this will have some more follow-up moves coming in. So at least a 1500, 1550 is the target from a short-term perspective is what we can anticipate there. So I would recommend that we can go ahead and take a buy trade on a staggered manner. So if it opens at 1350, obviously we can initiate some trades there and we can use some intraday pullback if at all that happens. Overall, we need to maintain a stop loss at 1280 and 1500 to 1550 will be the target on the upside.
What a mover this one has been, IRCTC, really. I mean, if you look at the last 7 days, last 1 month, last 3-month data, you've actually gained across that time frame, but it did dip a little bit in between in the last 1 month and has recouped very, very smartly. So do watch out for that particular stock in the session. Well, Motherson Sumi's up 6%. The other one which is doing really well is Dixon Technologies. The last 3 days, this one has done very well. There was some report in one of the newspapers, I think Times of India, which spoke about how South Korean manufacturers are looking to set up bases in India or look at Indian companies manufacturing, and they want to move out of China, some part of the production chain. So maybe Dixon, Amber, some of those back-end manufacturers could be interesting. Siddharth Khemka, you guys have coverage here?
No, Neeraj, we don't have coverage, but I just wanted to comment. So if there are the two factors. One is definitely some of these global manufacturers looking to shift out of base from China to India. The other is that India itself is a huge market, and some of these Korean companies, they supply to India from some of the other regions. There is an expectation that there could be a good pent-up demand once the lockdown opens up. We have already seen some notifications from the ministry saying that the e-commerce companies can start selling off in some states these electronic items and some of these consumer durables. So these are all positive developments. Generally, these are some of the low-ticket items, some of these consumer discretionary can see a good pent-up demand once things open up. So definitely looks good at this point in time.
Okay. Gentlemen, stay on. We are minutes away from market open. Let's tell you all that you need to know to stay ahead in trade today. First up, TCS reported a 2.5% sequential decline in US revenue terms. Margins remained flat at 25%. The management expects COVID-19 outbreak to hurt operations in the current quarter, with some recovery only in the third quarter.
Ministry of Civil Aviation asked airline to refund the entire amount for all airline tickets booked during the lockdown period.
Opera Realty repays NCDs worth 125 crores ahead of the scheduled date of repayment, which is April 23rd.
Mahindra and Mahindra's renewable energy arm has completed sale of its arm Divine Soldran for about 124.47 crores to CLP India.
Well, L&T Mutual Fund reduces its stake in BEML from 5.11% to 2.69% on April 15th.
And Morgan Stanley says the impact of the lockdown will be felt more on NBFC loan growth and less on revenue, but asset quality and credit costs will take a hit. And probably that's something that we've been actually hearing from at least some of the NBFC conversations that we've been having, is that the credit cost seems to be a little bit of a problem. Asset quality, now the issue of recognizing NPAs is also something which is an ask from the industry, whether that can be pushed a little forward from 90 days to about 180 days. And that, if it comes about, can be a bit of a relief for the NBFC pocket as a whole. So I'll keep all of those in mind. We're at the end of pre-open and we've got a good close of pre-open. Nifty is solid in the green, 3.6% higher. Sensex also 3.5% higher. So everything looks good, at least at the end of pre-open right now. A quick word on Bajaj Finance and Finserv, Shrikant Chauhan. Shrikant?
Yeah, I feel like whenever the stock moves higher, it comes at some selling pressure. And yesterday also, when there was activity and recovery in the market, it was not participating to the move. But we are of the view that 2100, 2150 is acting as very good support for it. Until the stock is not breaking 2100 comfortably, I think it is going to spend some more time in the range of 2100 and maybe 2450 on that side. But Devina will like Bajaj Finserv, which is currently trading around 4650, 4700 levels. And there, if you see the volume-based activity, then it's quite encouraging. There we feel that the stock is moving towards its next resistance of 5600 or 5700, which is far, far away from the current levels, which is almost 10%. So instead of buying Bajaj Finance, it is better to focus more and more on Bajaj Finserv at current levels to create some long position with a positional view.
Okay, so there you have it. Between a Bajaj Finance and a Finserv, at least from a trading standpoint, Finserv looks like a better proposition. Within the private sector banks, Siddharth Kemka, we know IndusInd Bank has issues. Axis Bank too got beaten down. Both of them at relatively good valuations. ICICI Bank, probably the outlier in the pack, where the commentary by brokerages is still extremely positive. What's your take? Now, obviously, if something comes about for NBFCs, this is going to be positive for banks that have exposure to these NBFCs as well and provide those lines of credit. But within this pack, what do you like?
Yeah, Devina, so as you rightly said, any relief for NBFC will be positive for some of the banks which have higher exposure there. But the problem is this is a relief. This is an interim relief. It's a deferment of some of the issues on non-recognition for some time. But the larger issues at hand is there and would continue to come back and impact these numbers maybe 3 months or 6 months hence for whatever grace period that the RBI provides. So our view is if any bounce that we see some of these weaker banks, for example, IndusInd or Axis, if one could look at exiting on any bounce. The preferred picks here definitely is an HDFC Bank and an ICICI. ICICI has been resilient in terms of its numbers so far, and that is something that we prefer.
Siddharth, we'll leave it at that. Thanks much for joining in and giving us your perspective. Quick calls. Shubham Agarwal, your top call for the day today.
Neeraj, I would want to go with Bajaj Finance, even though it is already opening with a big gap up. But I believe that the short covering rally that we are expecting there could be of a high intensity, because in this entire up move, the stock
Okay,
has
it
not.
is Bajaj Finance. I'll have to come in here because the markets are starting. Shrikant will take in your top call post-market open, but here's how the markets are starting off. 3.44% higher for the Sensex in the pre-open session, and the Nifty 3.59%, and that's how they have started off even on open. So strong show with the Bank Nifty starting off 5.25% higher. Mind you, this is just the open. Now let's see if there is a bout of short covering that kicks in, and that takes the indices even higher during the intraday period, or do these buckle down? Time will tell. But the US futures are up. There is an RBI press conference. I reckon the mood is positive right now. Let's see. Maybe there's some profit booking that comes in as well. But for now, let's focus on the movers and shakers, on the large caps first, and then we'll talk about the mid caps. Axis Bank, principal gain of 452, 7% higher. Axis Bank has gained 50% from its recent lows. IndusInd Bank, 6.5% higher. HDFC, 5% higher. Finance, about 5.7% higher. ICICI Bank, Kotak Bank are doing well. FinServ is up about 4% as well. HDFC Bank is at 914, so really strong. So HDFC Bank, by the way, viewers, has gained 100 rupees in the last from yesterday's lows. All Nifty 50 stocks in the green. IT is probably the lone ranger which is lagging a bit. HCL Tech is the weakest performer, up about 0.5%, but TCS, just want to mark that one, Infosys, TCS, etc., all of them have actually done really well. So, well, the news is, viewers, that it's a great start. It started off very well from a bull's perspective. The question is, can it hold on? They will have no doubts that the broader markets are doing equally well.
Oh yes, look at the breadth of the market. We've got about 1,160 stocks advancing and only 60 stocks in the red. So it's an extremely positive start. You've got all of the NBFC pocket, in its entirety up and about. Housing finance companies, your consumer finance companies, coal finance companies, microfinance lenders, everything is up in the session. We've got real estate as a pocket doing well. Oberoi Realty is up about 11%. We've prepaid some NCDs. And you've got Godrej Properties also. I think that's also up in the session. A few other names, Ashoka Buildcon yesterday saw an 18% uptick. Today is up another 9%, so that's going well. SolarFin is up about 9%. For somebody, it's got a 12% uptick in oil. That's at 141 now. Indiabulls Housing is up 10%. We've got tire companies again yesterday. Remember, crude oil prices continue to come off, and some of these paint companies, tire companies, likely to do well. Equitas is up. G1 also is up. L&T Fin Holdings is up 8.5%, 9% almost. JK Lakshmi Cement, we've seen partial opening of a plant, so that's doing well. Shriram Transport Finance, again from the NBFC pocket. AC International is doing well. GM Financial saw a big uptick yesterday, and continuation of that in today's session. RBL Bank, UCO Bank, smaller banks were also up and about. Indiabulls Real Estate, Sadbhav Engineering, Lakshmi Vilas Bank, even FinServ is up 5%. Divan Housing Finance 5% higher. Piramal Enterprises 5% higher. ITD Cement also remaining in green. Losers on the Nifty 500, there are a handful of 8 stocks which are in the red, and JP Power, not really material. I mean, it's a 7% stock, and the rest of the pack is the penny stock are down in this section. Sounds of Havells, which is the only one that's down about a third of a percent. So everything else is up and about, and it's really looking like a good, strong, stable start.
Shrikant Chauhan, opening thoughts and a top call for the day today.
Yeah, Neeraj. See, the market opened higher. It has made high of 932025. The one stock which is currently available at its reasonable support area is ITC. The stock has formed double bottom formation on daily basis, and it is comfortably trading above the important support area of 175, 176. So we feel that it is heading for the levels of at least 200, 205 in the near term. So it's a very strong bet to create long position at these levels with a stop loss at 182 on the downside. And we can expect minimum 196 and maybe 200 plus in next few days.
Okay. Chairman Shrikant Chauhan, Shubham Agarwal, thank you so much, gentlemen, for joining in today and giving us your thoughts. Appreciate your time. Well, let's get in a really important market-wise. What a day to get him. Nippon Mutual Fund put out their investor memo which said that challenging markets are friends of long-term investors. and there is opportunity amidst panic. Well, we're getting him on a day when the market is probably looking at opportunities. Manish Gunwani speaks to us after a while. Manish, so good having you. Thanks for joining in. Neeraj here. Good morning.
Hi.
Seems to be a good morning. What's your sense, Manish? How are you looking at the current market scenario?
So I think if you have a 1 to 2 year perspective, I think it's a very attractive market to invest in. And I'm not just saying this because I expect things to get very good in the short term. I think things will be challenging because this is a kind of shock which is unprecedented in terms of loss of economic activity. Obviously, it's bigger than GFC in the sense that in GFC, at least 100 rupees of sales went to 50. It's gone to zero for a lot of industries. So that will be really challenging. But I also think that hopefully by time-wise, it should not be that big. So maybe in 3-6 months. And also what I feel is a lot of the industries will see massive consolidation in profit pools, where the top 3-4 guys will get market share from the smaller guys and unorganized guys. So I think corporate profits will probably do better than economy in that sense. And ultimately, stock markets are a play on corporate profits. So, yeah, I think even if the economic recovery is a bit delayed, I feel that also given lower interest rates globally and a better outlook on corporate profits, I think market should do well.
Okay. Manish, we have the RBI press conference slated up later today as well, without trying to preempt what will happen. But I'm just trying to understand from you that if there is some measures taken for NBFCs, and then if the government comes out with that much touted relief package for the beleaguered sectors, does that change sentiment, even if it, as you said, doesn't quite change the business impact on the ground? And therefore, is that positive for that entire wide bucket of names in the listed space?
So I would think the fiscal stimulus is more important relatively versus the central bank measures, because I agree that obviously central bank can do a lot as well. But I think if you split the problem into liquidity and solvency, to a certain extent, the liquidity thing has been sorted out with a moratorium of 3 months. But I think the bigger issue is, given the kind of extreme shock we're seeing across sectors like NBFC, real estate, manufacturing, a lot of segments within manufacturing like textiles. It's also a bit of a solvency problem, in the sense that if for next 6 months you're broadly going to get operating losses because sales will be negligible and you have fixed costs, the debt to equity ratios permanently will go to a slightly elevated level. So I do think that there has to be a way where the government not only defers debt servicing, but also funds a bit of it through a fiscal stimulus. I hope that happens. And that will be very positive to my mind.
Mm-hmm. Manish, good morning. Devina here. Just want your sense. We have primarily been a consumption-oriented economy, not manufacturing-oriented economy. But of late, it looks like with the entire dependence on China for various industries, maybe getting a part of manufacturing out of a country like China into countries like Vietnam and India and Indonesia. Do you feel then we might slowly start to tip the balance towards manufacturing, because consumption, as we know, is being hit, and for consumer confidence to come back to really start spending to spur the economy is going to take some more time?
I do think that out of this whole crisis, again, if you are looking at the medium to long term, one of the biggest positives will be that India will have a massive opportunity to shift manufacturing from China. Just anyway, a trend which was picking up in certain segments like chemicals. But I think if you put this crisis in context with, let's say, the Hong Kong disturbance, the fact that the labor costs and environmental compliance costs were anyway going up in China. So there are a lot of factors, and this could be, the tipping point for a lot of global MNCs to start looking at India, because in a lot of goods and services, I would think that a large domestic market is also required to develop the ecosystem and the skill set. And a lot of the small Asian countries don't have that big domestic market. So whether you look at electronic manufacturing or pharma APIs, there is already a decent ecosystem in India given the domestic market size. And if that can be scaled up, that might be one of the big positives to come out of this crisis. And you're correct that finally, for India to do well, not only from a growth perspective, but also from a social equality perspective where jobs need to be created, manufacturing has to be incentivized. And the other tailwind to this, at least till now, is that the yuan has not depreciated as much as rupee this year, so you get a 5-6% differential currency strength against yuan as well. So I agree. I mean, this is one of the biggest positives I would think coming out of this crisis. On top of, as I said, it was a trend which was developing, but this might accelerate that.
Yeah. But do you think us trying to establish ourselves as a manufacturing hub, put our place in the supply chain, global supply chain, is good enough to attract foreigners to come in lock, stock, barrel and pump in hordes of cash that they have been removing, since the start of this collapse? Because up until now, much of the money came in because of the strength of the population and the consuming capacity of the population. Do you feel that could also be the differential that would probably whether the FIs want to come in now, later, and how much they want to participate?
See, my sense is it will happen more easily where the two things can't be very differentiated, in the sense that if you have an ecosystem already built for the domestic market, I think what will happen is, and we've seen this with chemicals especially, is that whereas in textiles, if you see Bangladesh and Vietnam have done a better job, but where I think there is some engineering skill set required, where there is a domestic market which is important, which gives you the ecosystem to build large manufacturing capacity, I think it will happen more easily there. And also the domestic market will serve as a bargaining chip for the government to ensure that these MNCs, if they have access to that market, they also invest in capacities to export. So that's why I think just for export, maybe the investment might be a bit less to my mind. But if you look at things like auto ancillaries, chemicals, pharma APIs, electronic manufacturing, maybe value-added steel, a lot of these segments, India already has the scale to build world-class manufacturing capacities. And to my mind, those are the things. Like if you see, a lot of the German MNCs already are exporting from India a bit, apart from servicing the local market. And for them to scale up to cater to a bigger part of the global demand should be very easy, because they already have the starting point ecosystem here.
Manish, one final question from my end. Do you envisage any large industries changing or turning upside down, and therefore the business model is not becoming redundant but becoming a thing of the past? Larger pockets, if at all. I mean, a lot of people are talking about the demise or a complete change in consumer finance, for example. Do you foresee any of this, or is this just too much bearishness out there?
Very difficult to call in terms of consumer behavior. See, there are different historical examples. So if you see the US virus crisis in 57, 58, nothing changed after that. But from anecdotally, people are saying that going out to restaurants, traveling in airlines, etc., will reduce. I think it all depends how long this goes on. I think if it gets sorted out in 2-3 months, just like SARS, maybe a bigger version of SARS, but people will probably forget it. And maybe in a year or two, behavior should be back to normal. But I think from an investment perspective, it's good to think about sectors where there is debt, because I think where the industry characteristic or market share gains will change is where there is a difference in balance sheet between the top guy and the number 3, number 4 guy. And I would think that will drive a lot of market share gains for the top guy. So overall, if you ask me what broad change we'll see, at least as of now, it looks likely that the profit pool consolidation among top 2-3 players versus the rest, I think there is a good chance that will go up.
And okay, so that's an interesting, that's a thought too, and probably a safer thought, because I agree with Manish. Maybe you can't quite predict too many things. Manish, one last question from my end. Do you reckon? I heard you mention something about FMCG in the earlier answers as well. But would you, if you had to, swap some money out of that expensive basket into some of the beaten down names? Would you try to go as extreme?
So I think buying financial leverage is a bit risky at this point of time. But operating leverage, as I said, I'm more comfortable moving money out of expensive bucket, yes, but rather than going to a very financially leveraged sector, I would probably go to a sector where there is difference in financial leverage between top 1 or 2 players versus the rest, because I think it's a safer bet to assume that in that case, the top 1 or 2 players will get massive market share. Not that the others may collapse, but just that we've seen historically that when a balance sheet is stressed, then the investment in brand, in quality of talent, in distribution tends to reduce for the stressed players, which gives a lot of opportunity for the top players to get market share, because they are able to invest in the market at that point of time. So if you support your supply chain today, I think that will give you benefit over the next 5-10 years. So I think that those are the opportunities I think worth looking at.
Manish, I want to know from you whether or not post this crisis and post us emerging from it, do you see a different set of leaders? The last rally leadership came in from financials, banks, NBFCs, because of the kind of growth rate that they posted. Though obviously after IL&FS that started to come off a bit, but still the good parentage names continue to do well. Will the leadership continue to come from there, or the leadership candidates change now?
Look, I think financials ultimately has to do well if the economy has to do well. So I don't expect the markets to do phenomenally well without financials doing well. But maybe they would be probably a bit back-ended to recover, because we need to see how much of, I think there is fair amount of stress. And a lot of it will depend on government policy, as we are discussing, that if the government is more aggressive in terms of fiscal stimulus and economy bounces back, obviously financials will bounce back faster. But I do think that as we were discussing, that some of the manufacturing sectors, their representation in the index should go up. Now, whether that becomes really big to call them leaders, because financials, the base rate is so high. So I don't know if financials will lose their status as the biggest sector in the index. I don't think so, actually, because also the non-lending financials are also good businesses, right? And insurance and all that. But I do think that given the chance for India to get market share in global manufacturing, whether it be knowledge-based like pharma or just plain vanilla manufacturing like textiles and electronics, I think those companies' representation in index should go up.
Got that. Manish, great hearing from you this morning. Hope to hear more often from you. Thanks so much for joining us this morning.
Thanks.
All right. Before we wrap out, obviously, market is on an extremely strong footing right now. But just to give our viewers a quick update on the latest coronavirus numbers here in India as of 8 a.m. on the 17th of April. So you've got a total confirmed case number of 13,387 with active cases at about 11,201. Your discharge migrated, that number has also gone up. So that's the good part. 1,749 there, with a depth of 437 in number. So in the last 24 hours, you've seen fresh cases increasing by about 1,000, with 23 deaths coming about.
Devina, just before we wrap up, just want to mark TCS. It's the top gainer on the index. Imagine on a day when there is a risk on trade and banking and financials are topping the charts, you have an IT company at the top of the pile. And I would reckon, Devina, I don't know if you read into this differently, but I would reckon this is in part also due to some short positions that existed in the IT counters ahead of the numbers. We've seen that in Wipro's case as well, and today we're seeing that in TCS case as well. A minor green yesterday, and today that really sharp pullback move that we're seeing, 1841, 7.5% higher in the trading day today, Devina.
That's a strong move. And we're going to hear from the management of TCS in just moments from now. So let's see what they have to say about the quarter four numbers and the way going forward. But I think that's about all the time that we have here on Indian Open. We've got the indices holding strong, 3% high. Let's see whether they carry on these positions as well or not. But it's a goodbye from Neeraj, myself, and the entire team that's put the show together. Thank you so much for watching.
And remember to tune in.